How you doing, everybody? This is Martin Mesa with Rate One Financial Incorporated. Welcome back to Mortgage Mind, and today we are going to highlight 6 ways you can get the seller's attention when making an offer on their house. Okay, so you're a buyer out there, you're trying to get your offer accepted, you're submitting offers on homes, not having much luck, maybe getting a little frustrated, getting turned down, getting outbid, whatever. You know how it goes, right? That's kind of like the market we are in right now. It's summer of 2021. In my area of Southern California, that's the market we're in right now. It's a seller's market. You got way more buyers than sellers. So you got a lot of competition for the same house. Lots of buyers vying for that same house. So as a buyer, you want to try to do everything you can to get your offer to stand out amongst the competition. And I've come up with 6 ways that I think can help a buyer get their offer more seriously considered and increase the chances of getting that accepted. So these are not original to me. These are just things that some of my clients have done that have been proven successful. So before you do anything in terms of exercising any of these options, I strongly recommend going over these options with your realtor, with your loan officer, to make sure they're on board with you doing it. That way you don't get yourself into trouble, and you know all the pros and cons and know what you're getting yourself into. But anyway, without further ado, number 1, you want to honor the listing agent's wishes. The listing agent is the seller's realtor. And what we always do is we try to call the listing agent when we submit an offer, sometimes even before we submit an offer, which is, I think, better. And the realtor would usually do this. Sometimes a loan officer will do it too, is try to find out what's most important to the seller. And more importantly, what the listing agent does not want you to do when you submit an offer. Just do what they want, because you don't want to start off on the wrong foot with them. You want to, do what they want. So for example, if the listing agent tells you not to include a love letter in your offer, then don't do it. A love letter is just like a letter, with usually a picture of the buyer and the buyer's family, and kind of trying to tap into the emotions of the seller, to emotionally connect with the seller. Some sellers like that, and sometimes it really helps get your offer accepted. But if the listing agent says, hey, the seller's not concerned about that and doesn't want love letters, please don't submit your offer with a love letter, then just do what they wish. That's what I think anyway. I think you're better off doing that and abiding by their honor, their wishes. Okay, so that's number 1. Number 2 is submitting an offer with no or very minimal contingencies. Contingencies are things that are built into a buyer's offer that will give the buyer opportunities to cancel or back out of the transaction for those reasons and still be entitled to get their earnest money deposit back. So when you submit an offer on a house and you get accepted, you need to submit money to the escrow company. It's called an earnest money deposit. And if you have to cancel the transaction for any reason, if you don't have a contingency to use as a reason for the backing out of the deal, that deposit may not come back to you. It might go to the seller and you might not get it refunded back to you. So that's what's important about contingencies. It gives buyers different reasons to cancel a transaction and still be entitled to a deposit back. Now, if you submit an offer with no contingencies, or maybe just one contingency, then you're telling the seller, hey, I want this house so bad that I'm willing to give up all my contingencies and even give up my earnest money deposit because I want this house so bad. So if you don't have any known contingencies, you're not going to get that money back no matter what reason you cancel. The seller's going to keep that deposit. So that makes you a much stronger offer, because the seller has very little risk, or much less risk, in accepting your offer, because if you back out for any reason, they're going to keep that money no matter what. So that's very enticing sometimes to a seller. So number 3 would be non-refundable payments to a seller, which is similar to number 2, but these are things where you're saying, you know what, I'm going to deposit this money and the seller gets to keep this money no matter what, right away from the get, or maybe after a certain number of days from when escrow opens. you could say, okay, I partially, after a certain amount of days, release a certain dollar amount of my initial deposit that my seller gets to keep no matter what happens. That's another very attractive thing to a seller. Again, it helps loosen the blow to a seller if they know they're going to be able to keep a certain amount of money. If for whatever reason the transaction doesn't wind up happening, it's not to them such a waste of time if they get to keep that money. If for whatever reason you have to cancel for any reason. Okay, number 4 is make an offer in writing with your largest down payment amount available. Okay, so if you have enough in the bank or from what you can borrow from friends or family or get a gift from friends or family or whatever, to put 50% down, put that in the offer. Now you may not want to put 50% down. Your lender might have told you, hey, you can get this loan with 10% down or 20% down, and that's really what you want to do. But let's say you have enough to put 50% down with your source of funds from wherever you're getting from. You might want to write that in the offer, and you got to be willing to put 50% down if at the end of the day, that's what you need to do in order to get that loan, because you committed to it. So think about that first. Make sure you talk it over with your loan officer. But you know, it's a great way to make your offer stand out. If the seller sees 50% down and they're looking at it compared to somebody with 10% down, that 50% down looks a lot stronger. Okay, number 5, rent backs. So a rent back is when you allow the seller to continue living in the house after you become the official owner of the house. And they can stay there for, you know, a number of days that you agree upon in writing with them. You can charge them rent or not, or you can charge them very little rent. So this is a very attractive way to get a seller's attention. Sometimes the seller is not that concerned about the money. They just don't want to be stressed out and have to move, you know, all their stuff, you know, all quickly, because a lot of sellers don't want to start packing up all their stuff until they know for sure that, you know, the escrow is going to close and that they're going to get their money. The last thing they want to do is have the moving truck loaded and then they find out you can't close on your deal and they got to start over with another buyer and they've got their moving truck packed. So a lot of times they'll just say, well, I don't want to start packing until I know for sure this escrow is going to close. And if you let them stay in the house for 30 days or whatever, 60 days, whatever they need, then they don't have to stress out so much about getting all their stuff packed. They can wait till escrow closes, wait till they have all their money, and then start packing up and doing things on a little bit more relaxed pace, not so stressed out. That's very attractive to a lot of sellers. So consider offering that rent back. You could charge them rent, like I said, but maybe even consider letting them live there for free for 30 days. You know, it's money out of your pocket, but you know, believe me, that is a very attractive thing to a seller potentially. So consider that rent back, plus possibly a free rent back. Okay, number 6 and the final one is buying a house with all cash. Now, you may not have the cash to do it, but maybe you do. Or maybe you can get the cash from family or whatever and buy a house all cash. Because believe me, if you submit an offer and say you're gonna buy all cash, you don't need a loan, you can close in like 5 days or whatever, that can be a much more attractive thing to a seller as opposed to somebody that's saying they need a loan that's gonna take 30, 45 days to close. So consider buying a house all cash. And you may not wanna put in all that money into that house if you even have it, but if you can do it, buy it all cash, you might be able to get a good portion of that money back after escrow closes and you're the legal owner through what's called a delayed cash out refinance or cash out refinance. So you might be able to get a lot of that money back. You could buy a house all cash and then maybe get a loan for 80% of that sales price, so that, you know, it's almost like you're getting a 20% down loan, but you're getting the loan after the fact. And you're getting the cash back after the fact. So talk to your loan officer about whether or not you'd be eligible for that type of loan program, you know, after you buy a house all cash. So those are the things I think that can help a lot of buyers get their offers more seriously looked at, more seriously considered, and increase the chances of getting your offer accepted. Hope that helps. If you want to talk about any of these strategies, talk to your realtor, your loan officer. I'm sure they know about it, or give us a call. All right, hope all is well. Take care, and we'll see you on the next episode of Mortgage Mind. If you like what we're doing, please like and share with your friends and family.